The CNBC app. Global market news in one place. Customizable sections and personalized alerts. Stocks tracking, interactive charts and market insights all in your hands. Stay connected. Stay informed. Download the CNBC app today.
Well, a very warm welcome to Squawkbot. Apologies for the slight delay in getting to air. I'm Steve Sedgwick with Karen Cho, of course, and these are your headlines. Robust domestic demand driving Chinese services activity to a 7-month high, whilst dollar strength pushes the country's yuan to a 16-month low. Xpeng shares accelerate after the EV maker announces a deal with Volkswagen to build an ultra-fast charging network across China.
Elon Musk extends his political interventions, calling for a snap UK election, as well as a new leader of the country's right-wing Reform Party, arguing that Nigel Farage doesn't have what it takes. Strong AI demand fuels Asian tech giant Foxconn to record quarterly revenues, lifting the wider sector as markets await a key speech from Nvidia CEO Jensen Huang today.
It's felt like weeks and weeks since you've been here.
It has
been weeks and weeks since you've been here. How are you?
I'm great. I swear I didn't touch anything at the start. That was not me. There was a few broken mechanisms. I think I didn't press the buttons.
Karen, you had a wonderful break.
Thank you.
Back in the motherland.
Sunshine in Australia.
Yeah.
Spent a bit of time in Singapore.
Yes.
I've got to say, in terms of a place having their moment,
yes.
Singapore is on fire in terms of tourism, its approach to innovation.
Fantastic.
Although I must say there was one missing segment.
What's that?
Chinese tourists. Where were they?
Is that true? That's very interesting.
The high-end restaurants, the high-end hotels.
Spent a little bit of time in
Didn't see
London.
any.
A lot of French tourists, a lot of American tourists, a lot of tourists. But as you quite rightly said, I didn't see a lot of Chinese tourists.
Exactly
now, I don't know if that's
there.
anecdotal what we're hearing. But,
Exactly the same in Singapore. There is a lot of decent spending, not high-end spending, not five-star necessary spending, but decent spending for experiences taking place. But I really thought the Chinese tourist was lacking, and as a result, some of the typical restaurants that would have been full at certain times and certain days empty as...
The reason is logical, and that is because the Chinese consumer has been reeling, haven't they, from the property market collapse. The concerns have, of course, ripped through into the stock market, but there is a lot being thrown at the Chinese economy. And actually, China's services activity grew at the fastest pace in 7 months in December, but overseas orders fell. The Caixin Services PMI rose to 52.2 last month. That is the fastest since May. The composite reading fell to 51.4. Quick look at where the yuan is currently trading, 7.3285 to the dollar. Well, I'm delighted to say Sam joins us with plenty more before we get to our guest who's going to analyse the Chinese markets for us. Sam, lovely to see you.
Happy New Year, guys. And maybe those two things are why Karen didn't see as many Chinese tourists here in Singapore as before, because there are pressures certainly on the currency. We've crossed that 7.3 psychological key level now, and there seems to be a lot of efforts on the PBOC's part via the state media, which is backed by the Chinese central bank, as well as its firmer than expected fixings each morning to that yuan midpoint, that it is continuing to try to defend the currency, act as a bit of a buffer in the face of some of that depreciation pressure. We know that, of course, they are likely to use this as a shock absorber in the face of those Trump trade tariffs. But right now, onshore, 732.85, that would bring us to a 16-month low. Let's talk about that services sector PMI, because in fact, people were at home spending, it seems, because this was very much supported. We saw a pickup in activity thanks to domestic demand. However, while that is encouraging, because we do need to see a pickup here, because this makes up for 60% of the Chinese economy, it wasn't all that rosy. In fact, if you look at overseas orders of the export of these services, that looked soft. Actually, the most we've seen, the softest, the lowest point since August 2023. And then on the employment gauge, which I look at very closely because the services sector is such a big generator of those jobs, actually shed workers for the first time in 4 months. And they attributed that to higher costs. That includes some of the inflationary input prices as well as the wages. So no doubt the disinflationary pressures continues to build here. And then then hampering the hiring even further was business confidence. And this really surprised me. It was actually the second lowest reading we've seen since March 2020. Remember that month? That was the onset of the COVID pandemic and when Wuhan was in lockdown. So that's how businesses are feeling right now. Some of this had been down to sort of the domestic situation. Of course, we know that a lot of these consumers are holding back on their spending. As Steve, you pointed out, that is because, a lot of their investments are tied up in the property sector. The value of those have gone down. We're not seeing any huge meaningful sort of tangible improvement in that, but also the externals as well. China doesn't really know what it's dealing with when it comes to the Trump trade tariffs. We know that a lot of the talk has been around this 10% additional tariff, whether that's on top of 60%, it's unclear. So they're keeping some powder dry until they understand the contours of that trade policy. And so that's why we've been sort of just relying on the data for now, but that hasn't really supported the markets today, even though it did look relatively positive, and it does look like we've seen some improvement. Equities at a 3-month low in trade this morning. We continue to see those bond yields also on the decline. They've been hitting record lows at the back end of last week. We're keeping an eye on the shorter end as well, the 2-year, because many are watching to see if that goes sub 1% as well. So there's been a lot of conversations around, of course, this very much showing that investors are pricing in imminent sort of RRR cuts. That's certainly the signaling we're getting from the PBOC, that they will cut the RRR, the reserve requirement ratio, and the rates at an appropriate time, they say. Then, of course, we continue to track the sourcing that we've heard out of Reuters with regards to the leaks around the expectations from the NPC, which is the annual meeting of Parliament, which will sit in March. And for that, we're looking at 5, 4 and 3. So around 5% GDP growth target, 4% of GDP on the record budget deficit that would make it, and then the 3 trillion yuan in special government bonds that they're likely to issue as well. So they're the expectations that the market is really, I suppose, hanging on to right now until we get that confirmation in March. I'll send things back to you.
Sam, thank you very much for spelling that all out for us. I got to say, a lot of conversations seem to be happening in the backdrop. There's charm offensive from the Shanghai and Shenzhen indices. Markets trying to calm some of the nerves out there. And you can see intraday now, the Shanghai composite is down slightly, about 0.5%. So modest moves there and across on the Hong Kong market. Bookended by much larger moves. We're seeing Japanese stocks drop by 1.6% today. So on the back foot for stocks out of Tokyo, and for the Kospi in the opposite direction, we've got a bounce of 1.8%, and clearly a lot of politics to follow for the South Korean market, something we will be getting up to speed with shortly. To the dollar, it is a story of dollar strength for 2025. We're seeing that against a number of different pairs and crosses. So euro dollar this morning tried to claw back some territory, not much success, as you can see. We're 103.10 early on. Sterling dollar 124.37. That has picked up a bit more pace, about 0.1% versus the greenback. Dollar stronger versus the Japanese yen, 157.73. A dollar also showing some might against the Swissy, punching forward by about 0.1%. Let's take a look at the commodities complex. And it was a decent old week for WTI and Brent last week, despite now these lingering fears about the Chinese market. And you can see this morning they are declining slightly. Both trades are falling roughly 0.4%. 73 the handle on WTI, 76 on Brent. When it comes to gold, interesting report is reading some suggesting it could still be a decent 2025 for bullion, given concerns around fiscal deficits and monetary policy. So spot gold prices at 26.34. So just moving back by 0.2% into the red, Steve.
Thank you, Karen. Eugene Xiao is the head of China Equity Strategy at Macquarie. Eugene, lovely to see you, sir. Thank you very much for joining us. Look, apologies for mentioning one of your rivals, and I won't mention the name, but they've just put a strategy piece on China in my inbox that says 2025 year ahead. The rainbow comes after the storms. Well, I get that, but how long are the storms going to last?
Yeah, that's a great question, Steve. I mean, our view is that 2025 will be a tale of two halves. I think the first half is, you could say, is the storm. I mean, because there's so many of these event risks. I think you guys just outlined in terms of the inauguration of the new Trump administration and then the policy response that follows from that. I would say that right now, it looks like, as you mentioned with the yields, that the monetary response is not really working at the moment. And everyone, it looks like the investors are waiting for that fiscal response. And that's where that storm's coming in, because the expectations could be wildly off. What we know, we mentioned 543 a second ago, but I think in terms of the content of whatever fiscal stimulus they come out with post whatever tariffs will go a long way into determining how equity markets perform in the first half this year.
With respect to the authorities over at the PBOC, Eugene, you and I have discussed this with Karen and others so many times. We knew that it's already pretty lenient, the monetary levels, the interest rate levels. It was always about providing the safety net. It was always about the fiscal response. It was always about getting the Chinese consumer to feel confident enough to stop saving and go and spend more money. Why is it taking so long to get meaningful fiscal response?
I think there's a couple of things. First is just the bureaucracy, of course, of China. I mean, we all know that with the CCP controlled government, you're going to be dealing with a lot of different layers of bureaucracy to get there. And I think that was, I would argue, what was slightly missing in terms of investor expectations at the end of last year, especially after that September bounce we saw in the markets. People expected some sort of immediate policy response to follow up from the PBOC, which we didn't really see. That said, given the typical policy cadence, we would expect something by March after the two sessions. So in terms of the when, I think at this point it looks like it will be at the typical cadence for the policymakers here. Though, given, you could argue potentially, and there are some people who think this, that if the tariffs are very onerous, they could try to surprise earlier. But we will see.
Eugene, no doubt the tariffs bring some threat, and I want to just take us to the portfolio strategy ideas that you presented, because reading through them sounds a lot like a European playbook. A lot of the issues that have been lurking in Europe for so many years seem to be almost a feature of the Chinese market. Now you're talking about zero interest rate policy, still like Gary, growth at reasonable yield, and we've heard that along the lines for European stocks for so long, but also M&A, whether there should be some corporate restructuring, making these companies grow faster, have more speed. Just talk us through some of those ideas.
Yeah, I think right now, just given the policy uncertainties, it's difficult for investors to try to bet on the size of stimulus, et cetera. I think what's more certain is that the government has made it very clear that there is a corporate restructuring, you could argue an institutionalization of the equity markets that they're targeting. And we saw this with the first move. The PBOC announced that $300 billion buyback facility that they're offering in September. And even just last month, they announced that for dividends, for instance, the corporate China Corporate and Security Settlement Corporation, they already announced they're going to have their fees for dividend issuances. So really, they're trying to remove a lot of these frictions to allow for more shareholder returns from the companies. I think this is a theme that will continue. And that links to the yield themes to a certain extent, but I want to disaggregate that because people think the yield theme is purely just a sort of a contrary to the low bond yields. But I do think there's actually a corporate reform story going on in China today that rivals what we're seeing in Japan and Korea.
The corporate reform story is fascinating because for so long in Europe, we've been talking about the inability for European companies to compete against Chinese companies. And you're saying now these Chinese companies need to reform. What does that mean in terms of the level of competition that could be coming from these massive enterprises in China down the track?
It means a lot. And I think one of the things is consolidation and exactly what you're saying in terms of the corporate reform. How will this rejigger the supply chains in terms of a lot of the criticism in China being overcapacity? Clearly, they want to address that. Now, it'll take time. I don't think this is something that happens overnight. Minimum, it takes, I would say, 3 to 5 years. However, I think the process has already started. And we saw that last year, some of these big mergers in the brokerage space, for instance. We saw that between Haitong and Guotai Junan, and then also in the shipbuilding space. These are areas which we argue are, quote unquote, overcapacity in China. And we've done some research along that lines. And we see a couple other sectors that could also see these trends start to occur over the next couple of years.
Eugene, I want to pick up on ZIRP, zero interest rate policy, because a lot of us had packaged that idea up and put it away for the time being. But it seems that perhaps it's coming back in various different places, parts of Europe. But you're mentioning China. Is there a possibility that China will head towards ZIRP, being big students of the West?
I would say it's a very, very low possibility. It's not impossible, but I think at this moment, it looks like it's more of a wait and see and more of a Keynesian fiscal stimulus approach as they're going to go into, rather than hanging on to just the monetary approach with ZIRP. However, I do think they've seen the results. And the thing is, ZIRP actually works in the near term. I actually, from the research that we've done, there is some benefit to going down that route. Now, How they do that, the actual execution and timing will be much trickier. I think just given the global yield environment with the 10-year, the U.S. where it's much more difficult to do something like that at the risk of the currency, right? I think this is sort of that balancing act that PBOC is struggling with right now between monetary loosening and managing the RMB. And we're still debating whether or not they're willing to go any lower with the RMB.
Eugene, I'm sure you get asked this question all the time. The best way to play the expected eventual post-storm recovery in China. Now, given the fact that you and Karen have just talked about the corporate reform story, which is an X factor for the domestic equity owners as well, is it better to A, go straight to the mainland or indeed Hong Kong and find your exposure to China? Or actually, is there a safer strategy by looking at international players who are playing China aggressively from outside?
I think at this moment, I'm actually more comfortable owning China in China. And the reason for that is because of the policy put effectively. And I think this is what we've seen in September. At the moment right now, we don't think China is particularly expensive. I think it's roughly maybe just under 10 times forward PE. From that perspective, I do think that, A shares in the near term will probably outperform overseas China shares. And I think that is probably because there's a lot of support from the government in that market, and the liquidity is still on the sidelines, I would say, especially after that September bounce. And I think from that perspective, I'm more comfortable in like a 1 to 2 month horizon owning the A shares. Now, as we see the storm work itself out, I do see that rotation potentially happening towards more of the international China shares. But in the near term, I do feel that A shares are probably a better bet.
Eugene, thank you so much for joining us today. I really appreciate the conversation. You fired up my brain cells for 2025, so I do appreciate it. Eugene Tsao with us, Head of China Equity Strategy at Macquarie. Hong Kong-listed shares of Xpeng surged after the EV maker agreed to expand its partnership with Volkswagen. The two car makers will build a network of ultra-fast EV charging stations in China. Volkswagen currently holds a near 5% stake in Xpeng.
Right, it's set to be actually a great week. Really, really heavy data, lots going on as well for global markets and indeed for politics. We're going to see certification of November's presidential election in Congress. Any of you remember why that's quite contentious last time? No? Right, OK. 4 years after the event was, of course, marred by violent attacks. Tomorrow we'll get euro area inflation and the first of the week's labour market data with jolts stateside before minutes from December's Fed meeting on Wednesday. On Thursday, US markets will be closed for a day of mourning for the late President Jimmy Carter. We're going to get the key non-farm payrolls release at the end of the week. Whilst on the political front, President-elect Donald Trump will be sentenced in his New York hush money case, with the presiding judge saying he will likely not receive any jail time or a fine. Yeah, the former scenario of the two, that would be fascinating, given the fact that he's about to be inaugurated. Anyway, Karen.
Let's take a look at those US markets Friday session, and markets, as you can see, just putting on a little bit of green to close out the trading week. The Dow moving into positive territory, 0.8% higher, but over the course of the trading week was still down 0.6%. So United Health helping out in that session. Elsewhere, it was a story around some of the big semiconductor plays, the likes of Nvidia helping drive the market forward for both the S&P and the Nasdaq. But still, even with that Friday pop, it was a loss-making week for the S&P 500, down 0.5% for the trading week, its third negative week in 4. Meantime, Treasuries, look at that long end of the curve. There have been some concerns still around what this yield would look like this year, and obviously as the market again starts pricing in around rate cuts and what exactly we're setting up for this year. We're 4.28 at the short end to 4.62 at the long end on the 10-year.
So this is a fascinating story. It's one of the most read stories in the United Kingdom, but actually, does it matter? Let me fill you in some details. Elon Musk has once again been sounding off on UK politics, first accusing the Prime Minister Sir Keir Starmer of failing to bring child abuse gangs to justice whilst the Director of Public Prosecutions, and calling for a snap general election. He's also been very critical of Jess Phillips as well. Have a look at that exchange. Then on Sunday, just hours after the Reform Party leader Nigel Farage described Musk as a hero, the Tesla CEO called on the party to dismiss Farage as leader, saying, quote, he doesn't have what it takes. So a lot going on there. And there is a lot more depth to this as well. There is a lot more. But last week as well, I'm sure you're aware that he was also eulogizing in Welt am Sonntag, which actually came out on Saturday, which I always find quite strange. Bearing in mind Sonntag is Sunday, about the AfD.
Yes.
Elon Musk is a stunningly powerful man. One could create an argument that he helped Donald Trump to the presidency. I don't think you'd have to go too far to say he was a help in that as well. But he's also a stunningly dangerous ally, as Nigel Farage has just found out. There were hopes that Nigel Farage would get a 6-figure, 7-figure, 8-figure, 9-figure injection of funds to reform to make it the largest party in the UK and make it possibly a party which could form the next government as well. But as we've seen, there was a disagreement about various issues between Mr. Musk and Mr. Farage, and straight away he's calling for him to be replaced. I personally think that we should allow Mr. Musk to say what he likes. We live in a democracy. The United States is a democracy as well. But it's how seriously the British political establishment should take Elon Musk, which I think is a very interesting question. Should they respond? Should they engage? Or should they just ignore him? And I have to say, someone of Elon Musk's, how can I say it, impression of himself might not like being ignored.
It's not just about freedom of the press or freedom of speech, is it? What we've got here is someone with a seat at the table at various different tables. So we've got one of the richest people in the world,
yes.
So enormous wealth. We've got major play in industries from EV to space to robots and beyond. Everything else we don't know, AI as well. We've got someone who has a seat at the table when it comes to the incoming administration. So
at the moment,
yes. So when it comes to
isn't there a Chinese phrase? You can't have two tigers on the top of the mountain. I know there is because I heard it on the podcast.
Well,
I love it.
Let's not second guess where that goes, but at this stage he does. So now we have someone who is meddling in politics in Germany, meddling in politics in the UK, and also is the owner of a massive
This is our first argument of the year. Let's bring it on.
Platform.
Flag it up, everyone. It's the first round of the year. Meddling? Well, he can say what he likes. We live in a democracy, Karen.
But we're not just talking about saying.
I agree with
so
him,
there
by
were
the way.
Conversations with Farage about Musk donating to the parties. We're talking about.
But if it's legal,
we're talking
who
about
cares?
financial donations.
But
here
if it's
as well.
legal, who cares? If it's not legal, then don't let it happen. But if it's legal and he has a democratic right in a liberal democracy, we're not in China, we're not in Russia, we're not in North Korea. If he wants to say these things, let him say it. It's just a question of how seriously we take it.
We're not talking about one jigsaw puzzle, one piece on that jigsaw puzzle. We're talking about a few different pieces, and you've put it all together. What is Musk's end game here? What is he trying to achieve? Is he just trying
Musk's
to voice
end game is to
his
back
opinion?
up Elon Musk's assets globally, as you quite rightly mentioned. He wants for Elon
Exactly.
But it's not,
so what is the end
that's
game
transparent,
here?
Karen.
I don't know. Is it transparent? So
Well, yeah, he wants
is
to be
he trying
richer and richer
to
and richer and have more dominance and more power. Yeah.
In the United States, in Europe, in the UK, and to what extent is that
But that's
dangerous?
not clandestine. We all know he wants to be
But
omnipotent.
is it dangerous? And if you look back over time, people that were media moguls that owned the press, for instance, that owned the airwaves, what sort of interference, what type of role do they play in policy making?
But if it's legal, but I actually don't agree with a lot of what Elon Musk says, but I do agree with his absolute right to have a voice and to finance who he wants to, if it's legal. If it's not legal, or we don't like the rules because he's too dominant, change the rules legally.
Cross borders, cross nations, cross countries. There's no regulation.
But Karen,
for that.
with respect,
there's no
legality
here.
But with respect, you and I on a daily basis talk about anything we want to talk about. We have a megaphone. All right, it's not Elon Musk's, but we still have a platform here on CNBC. Our producers, our editorial teams, our bosses don't enforce us to say something or not say it, as long as it's legal and as long as we stay within media rules and Ofcom rules.
Yeah, but
you
we
have a
don't
voice.
own billions
I have a voice.
and billions of dollars of assets globally,
Absolutely.
and we're not financing major
so rich
parties
people
in various
shouldn't be able
countries.
to say what they like.
No, I think if you have an invested interest, you need to be very careful.
But he knows.
About what
We
you're
all
doing
know
with
what
that.
his interests are. It's not clandestine what Elon Musk wants, is it?
I think it might still be. I disagree
So
with
you
on
think
that.
rich people shouldn't have the same
No,
voice
I'm
that
not
us
saying
poorer
that.
people should
I'm
have?
not saying that. I'm absolutely not saying that. And you know I'm
So
not saying that.
Well, I don't know what you're saying, though.
You really don't think it's that clear?
100%, I don't know what you're saying.
I think if you're looking at who owns what assets, who has what say
we
in
know what
various
assets
different
he owns.
governments.
He's not hiding his assets.
I know he's not. We're going in circles here. The point is
Because
that
you
if
don't
you've
think
got
he should have the
somebody
democratic voice that
who
you and I have.
has a seat at the table at the White House, and again, let's just narrow focus. The type of say that
He's not an elected official. He's not going before Congress.
The type of say that he has, exactly, there's no accountability here. So he's not an elected official, but yet he has a role in the incoming Trump administration. He has billions of dollars to his name and invest in various different assets. I think there's got to be a level of caution when it comes to what the end game may be. I'm saying if you look at anyone else with the same amount of power, politics and money at play, there might be some pushback.
So is there a limit
someone
to
else
how
played
much
the same
money you
amount.
can have before you say what you like?
It's not. It's the spread of assets. It's influence that you may.
Then let's change the rules.
We've got to go.
We haven't really, because we already took the breaks. I don't know. I want to hasten to add. I don't necessarily agree with most of what Elon Musk says, but I absolutely understand he has a total right to say what he likes.
But I feel like you're pushing me into a position to say something. And I'm just
not
saying.
Pushing you anything. You're saying we should control what Elon Musk says.
I'm saying there should be an element of caution. I'm not saying there's fear factoring. There's a fear factor here. I'm saying just be cautious. And if you've got someone who owns certain assets, who has certain power in certain government, and has influence when it comes to airwaves and influence when it comes to future technology, you put all those pieces together, and what is the end game?
Like, Karen, you say we have to be cautious. I agree, but what does that caution look like?
Well, I'm leaving it to the audience to make their own mind up. Coming up on the show, tech titans and investors gather in Las Vegas for CES 2025 with eyes on Nvidia CEO Jensen Huang's keynote address. We'll bring you the details next.
Got to be honest, Karen, I'm still talking about Elon Musk. Welcome to Squawk Box. I hope you had a lovely, restful holiday period. Welcome back. I'm Steve Sedgwick with the magnificent and controversial Karen Cho, and these are your headlines. So moving on, robust domestic demand driving Chinese services activity to a 7-month high, whilst dollar strength pushes the country's yuan to a 16-month low. Xpeng shares accelerate after the EV maker announces a deal with Volkswagen to build an ultra-fast charging network across China. Elon Musk, well, this is what we talked about, extending his political interventions, calling for a snap UK election. Again, interesting. As well as a new leader of the country's right-wing Reform Party, arguing that Nigel Farage doesn't have what it takes. And strong AI demand fueling Asian tech giant Foxconn to record quarterly revenues, lifting the wider sector as markets await a key speech from Nvidia CEO Jensen Huang today.
A little breather into this show and take a look at the markets. The US markets Friday session, you can see on the front foot, strong gains for the Dow, the S&P and the Nasdaq, but not enough to compensate for what was a loss-making trading week for the major board stateside. Big movers in session Friday, the likes of Nvidia, so real semiconductor play. The major boards, as you can see, a decent move on the Nasdaq thanks to that Nvidia trade. To the Asian markets, there's a lot happening under the hood, and it's on Chinese markets in particular. Another data release, this time showing us a little bit of movement around the Asia numbers. That's the good news. We said services activity expanding at a faster pace at the end of 2024. That offsetting what have been concerns around tariffs and what an incoming Trump administration will mean for trade policy with China. So that is the dominant threat. And the yuan is also falling, prompting a lot of calls for some sort of support here. Again, investors have been looking for a change of direction for those Chinese markets throughout 2024, and as we move throughout the start of this year, still some concerns about whether action is having any impact. And you can see the Chinese markets trading down from Hong Kong to China. Elsewhere, Japanese stocks down 1.5%. South Korea strong, almost 2% in the green. The opening calls, European markets, this is how they look. A little bit flat on the FTSE, but stronger elsewhere across the board on European markets. They were down Friday session, so looking for a recovery trade. Steve.
Right. Shares above. Poor Karen. I said, we're going to have a nice, easy show today, tee you back in, and we just have a massive, great debate about media ownership.
It's like a trap, wasn't it? I'm going to be really kind today. You've not been in for 3 weeks. I'm just going to take it easy on you.
I'm sorry.
And then you just launch it.
I didn't mean to be like that. It's just you always bring out the best in me, or the worst. or somewhere in between?
Were you that bored while I was away?
No,
nobody
really
talked to you,
good.
just yourself.
That's some really nice shows, but I did miss your vigorous debate. I have to say, I loved it. Look. It's scoreboards. Well, it's a better scoreboards when we disagree, I can assure you. Shares of Foxconn are higher after the company reported its highest ever fourth quarter revenue, up 15% on the. I'm just thinking about the next guest. He said in the break, he said, "Oh, don't get me on that." Up 15% anyway, Foxconn to $64.8 billion. The Apple and Nvidia assembler cited AI demand and forecast significant growth in first quarter sales. Foxconn is expected to release full fourth quarter numbers in March. Meanwhile, Microsoft has announced plans to spend $80 billion in fiscal 2025 on the construction of AI-enabled data centers. We're talking shopping list numbers here, aren't we? Huge numbers. Over half of the spending is expected to take place in the United States. And Vice Chair and President Brad Smith calling on President-elect Donald Trump to protect the country's AI leadership. Shares of Microsoft closed higher on Friday in what was a strong day for technology stocks stateside. Quick look at Asian chip stocks and where they're trading. I understand they're to the fore. Yeah, look at that. SK Hynix, 10% higher. Samsung Electronics trading up 2.8% as well. TSMC up 4.7%. The big question as we get closer to the guest, Karen, is are we going to ask him about Musk? No, he doesn't want to.
No, we're not. Technology industry leaders and investors are gathering in Las Vegas for CES 2025, which kicks off with a string of press conferences from the likes of AMD, Samsung and Sony today. Investors are also eyeing a keynote address from the CEO of AI darling Nvidia, Jensen Huang, this evening. Our colleagues in Asia spoke to the CES CEO and asked about the potential impacts of President-elect Trump's return to the White House.
There's a lot of good things that'll come out of President Trump, a more pro-business attitude, a greater focus on self-driving, a lot of focus on the future of artificial intelligence, highly skilled immigration, things like that, where I think he's very pro-business. However, the tariff issue, we disagree. The tariffs are taxes, they're inflationary. And we just announced a few minutes ago on the stage here at CES that the impact on consumer purchasing in the U.S. will be huge. It'll be about $90 billion to $143 billion if all those proposed tariffs go into effect. And that doesn't even count retaliation.
And let's get to Paolo Pescatori, who is a tech media and telco analyst, PP Foresight. Paolo, thank you very much for joining us. From what I've seen in the snippets around CES so far, very consumer-focused innovations. For instance, an LG television with a shoulder strap. Apparently, we like to carry our televisions around on our shoulder. An auto keyboard, which is some sort of retractable claws on a keyboard like Wolverine. And the other one was some sort of hormone testing function at home. Just talk us through some of the trends you're seeing at CES.
Good evening, good morning. Thank you very much for having me and for being so kind with your first opening question rather than be putting me onto the spot. That's quite entertaining. I did enjoy listening to that debate a few minutes ago, which I'm sure will continue for days and weeks ahead. So, yeah, look, it's the one premier event that we're all waiting to see, attend. It's one of the most powerful tech events in the world. There are others that are big in terms of volumes, but this is the one that really stands alone as the premier event of bringing together, big heavyweights in the world of technology, media, and the telco world. And a lot of business will get done this week. Typically, it's a show that's very much focused on home entertainment, wearables, PCs, laptops. And in terms of genres, it's very much around video, the streaming types of services and gaming. Increasingly over the last couple of years, it's morphed into more of kind of a car automotive type of event. And you could almost be mistaken for replacing the sea of consumer with car. And that really is an area where all of the big tech giants are piling into, given the need for having faster processors, the cloud, the amount of data centers required to serve all of the data that's being generated in real time from the cloud, from the car to the network. So those are kind of some of the areas that typically have been heavily debated, and we'll probably see a lot more of that. And of course, you have the weird, the wild, and the crazy type of products, which will never see the time of day beyond just on the show floor.
Paolo, I'm going to steer around the car conversation in case I end up parked in a Musk conversation again. But I want to ask you about Trump, because there is a big theme at play that the animal spirits are back in the United States and that perhaps corporates will focus their attention on investing in the US. And when it comes to technology, and Microsoft already saying it intends to spend $80 billion this year on constructing data centers, the bulk of that will actually be in the US market. Do you think the focus now, as we talk about tech that has really shown a lot of breadth in recent years, that thanks to Trump, we're now going to see a narrowing of focus in tech investments in the United States in particular?
Well, this is kind of the grey area, right? And obviously, there's some uncertainty given the change in the political environment. And, the tech sector is largely seen huge innovation, and there's a lot of focus on AI particularly. And that's something that the administration cannot ignore. And that's something that they need to think about very carefully for the next decade when we talk about the next generation of innovation and the services that be generated beyond that. And, and obviously, when you look at some of those giants that have invested heavily, not just the Microsoft this world, but you've got the Qualcomms, Amazons, you've got Alphabet with Google and others. That's a line that the Trump and the new administration needs to tread very, very carefully and not stifle that type of innovation and investment moving forward. And particularly when you think about the next generation of computing and devices, it's going to rely heavily on the innovation that's coming out now in AI to power all of that goodness. So that's an area they do need to tread carefully. And we probably won't hear much of it, to be honest with you, this week at the show, but that's something that we're going to hear a lot more of to provide a bit more guidance and clarity, because the last thing that the industry really needs is that kind of restriction and limiting, that element of competition. And obviously, ultimately, it's the consumers who have to pay the price.
Paolo, the bad news is I'm going to ask you about Musk. The good news is I'm not going to ask you about his political influence. I'm going to ask you about actually the importance of his stance on H-1B visas as well, because I think this is absolutely pivotal for whether that stuff is going to be made in America or that stuff is going to be made elsewhere as well. Having these brilliant overseas engineers, technicians coming into the States and having the visa to ply their trade in the United States, how important is it for the tech companies showing at CES?
That's a huge element. Over the last couple of years, you see the innovation that's come from Silicon Valley, and there's been no secret. A lot of that talent has been attracted from Europe. And, obviously being based in the UK and being at some of the events where they've really focused on trying to get Europe back at the forefront of innovation and driving and fostering that ecosystem, it's been very, very hard. And you've got the likes of, the big network vendors, Ericsson and Nokia, even reconsidering now where they have their bases. So that's a very significant point that's really, really important when you're looking to try and attract the good talent, which obviously is in very small supply.
Paolo, in terms of getting a slightly more granular, I don't know. Actually, first short question quickly. Can you talk about individual stocks?
No. I'm not in a position to do so.
No, fair enough. Okay, I just want to ask first of all, okay, on that basis, which areas of the market, our viewers who actually listen to what you say and yeah, that all makes total sense, which areas do you think, rather than individual stocks, look great value for our viewers or actually look a little bit overpriced? Because as you know, because you're the expert, there are stunning variations in the forward multiples for a lot of these companies.
If you look just generally in the sector and you look at the innovation that's coming and what's actually needed, it's great to have the latest and greatest iPhone. It's great to be able to experiment with smart glasses or dedicated VR experiences and then to invest heavily in the car. But the real value in all of these products ultimately lies under the hood. And, particularly around the processors. So I think the processors is a really key area for differentiation, because that obviously, the more capacity that you can put into that processor in terms of speed, GPU, then you're obviously onto a winner. So I think that particular area will drive not only the devices, the network, the connectivity, but also a lot of the data centers as well. And so that whole area of compute combined with that is where there's going to be huge demand because of the proliferation that we're going to be seeing in terms of data usage and loads of the networks generated from all of these devices that will be connected to the network.
Thank you for listening to Squawk Box Europe Express.
For more market-moving news, you can head to cnbc.com.
Or join us again on the show with Steve Sedgwick, Karen Cho, and myself, Arabile Kumete, weekdays on CNBC.